make it compliant, things like identity data. And then because all the different institutions are all generating their own blockchains, similarly how many Web3 teams are also generating their own blockchains, you have this very large fragmentation. And that fragmentation, the technical fragmentation, creates a fragmentation of liquidity, and infrastructure solves that as well by connecting all of the chains and allowing all of them to interact and transact with each other. So this is really the body of work that Chainlink is involved in, is being the most widely used data layer to provide data to both Web3 and capital markets chains, and providing the ability for a connection between all the bank chains and all the Web3 chains, and then eventually a connection between the Web3 chains and the bank chains into one, what we call Internet of Contracts. So really the Web3 DeFi world and the capital markets bank chain world will eventually merge into one world of financial transactions driven by a set of standards around data and connectivity as a key piece of infrastructure, in addition to all the blockchains and all the smart contract frameworks that they choose to use.
100%. And I think the Chainlink will be the key driver for this kind of adoption. And I think institutions are already showing that they are interested in this crypto space. We've seen the ETFs, of course, will also talk about Ethereum being the second to be going through that as well. I think banks are right now having finally the appetite, and central banks are already driving banks to have part of their portfolios in crypto, as well as having the rails between DeFi and other financial instruments within the financial bank offering, as well as all these on-ramp, off-ramp kind of mechanisms. Data, of course, synchronization, seamless user interface, not only on the consumer side, but also on the banking side will be extremely important as well. That being said, what do you think is the most exciting thing happening right now? I think for us here in Dubai, we're really excited about the number of projects, including and not limiting to programmable money, for example. What else can you say about that kind of area? Central bank issued cryptocurrencies, maybe some other kind of things that will add value to this kind of merger between traditional as well as crypto-based systems.
Sure. So there's kind of the world of assets, which is where you see a lot of use cases like RWAs, generating tokenized private equity, tokenized real estate, tokenized carbon credits, tokenized whatever you want from the traditional financial system as a superior format for an asset. And it's superior because it proves things about the asset in ways that the existing financial system doesn't prove. For example, what is the status of the underlying asset from the point of view of the validity of the carbon credit or the status of the real estate? It basically gives you a lot of insight as to the value or the current status of the underlying asset or collateral. On the CBDC side, that is much more on the payments side, on the cash leg or the payments leg of a transaction. And in order to do a transaction, you really need both sides. To do delivery versus payment, DVP transaction, you basically need an asset that's going to be bought, and you need a payment method that's going to buy it. And so the CBDC side of the equation, I think, is very useful for creating a regulated, compliant, riskless form of payment. Because one of the big problems with the forms of payment that exist in the blockchain industry today, even in the Web3 world, is that they are not inherently as riskless as central bank-backed money. And a central bank-backed form of money that is legally made riskless, as long as the economy and the existence of the underlying central bank is there, and can also be smoothly transacted against an asset in a delivery versus payment transaction, I think is one of the missing pieces of the puzzle, in addition to the existence of an asset. And then beyond that, I think you really need secondary markets. So on the capital markets side, you need the assets, you need the payment method, and you need the secondary markets. And you need that triangle of things to start kind of cycling at greater and greater volumes. And that's getting built right now.
Yeah, and that circular economy is actually where we will see a lot of efficiency coming into the liquidity provisioning as well within, and merging between the two worlds of crypto as well as real life assets.
Yeah, absolutely. There's a whole other set of use cases in Web3, but those use cases are very kind of innovative, and then I think they're going to innovate, and then the banks will have a lot of capital. And actually, you mentioned the ETF. It's really funny to me how like 2-3 months before the Bitcoin ETF, if you ask the average crypto community member, what is BlackRock? Do you like it? Of the 20% of people that knew what BlackRock was, they would say, I don't like it because that's the man, and they're against this. I'm against the system. But once BlackRock ships a Bitcoin ETF and it raises the price of Bitcoin, everyone loves BlackRock, right? Now you ask the average community member, do you like BlackRock? They're like, yeah, they're great people. Let me tell you all about them. So I think you're just going to see more and more of that when people realize the amount of value in the traditional system, and that the only thing missing is really the ability for that value to flow into the public blockchain world and really benefit both the private chain bank world and the public blockchain world. But the use cases that you're excited about, could you tell me about those? What are the ones you're particularly interested in?
I think DePIN is one of the things that I'm super excited about. Is one of those amazing use cases that you talked about, like providing liquidity for building big things, right? So decentralized physical infrastructure is super exciting. Another thing that's super exciting for me is account abstraction. I think for mass adoption, we need to have an easier way for, rather than saving a certain amount of number of words as a password, fallback mechanisms. I was on one of the crypto exchanges a couple of days ago, and they had even a feature where if you pass away and your account is dormant, you actually specify your next of kin, so this can be passed to them. So a lot of these friction things that were native to crypto are now being removed or made easier, and I think this will drive adoption in a big way, and that makes me super excited about the future of crypto, not only in the traditional sense, but in the merger between the two worlds of convenience with institutional ways of dealing with digital money, as well as what innovation crypto will bring to the space.
Yeah, I completely agree with you. I think the user experience in crypto has a long way to go still, and also the ability for basically compliance, so that large categories of assets and payments and value can interface with the world, with the crypto world.
And what do you think is going to be the next thing that will drive mass adoption?
So I think DeFi is going to have another wave of innovation because we work with all the top DeFi protocols, and I'm seeing them continue to generate better and better systems, better and better examples of how the world should look. And when I go to bank meetings with the 4 or 5 largest commercial banks of a specific region, places like Australia, Hong Kong, Singapore, I do see the more technical folks copying parts of the DeFi code and parts of the DeFi contracts and parts of the DeFi model. For example, one concept that is very common and obvious in DeFi is 24/7, 365 market availability. That's not a thing you have in traditional markets. That in of itself is already like a very big leap forward for traditional markets, and creates all kinds of opportunities and challenges and so on. So I think DeFi is going to keep innovating and driving the very edge of what is possible with the financial system. And then I think the banking sector, whether that's the commercial banking sector, whether that's the central banking side of the equation, whether that's the payment side, whether that's bank issued stable coins, whatever category of traditional stuff you can think of, once that is on a set of standards and on a set of connectivity rails so that it can transact between both banks and Web3. Admittedly, Web3 transactions for banks will take longer, but now they're kind of getting in position to transact with each other. And once they've been positioned to transact with each other, they can transact with Web3. And by then, hopefully, the legal clarity that's being created here in Dubai and other places will allow enough of the banks and asset managers to put more and more of their value on chain in a way that is able to legally interact with DeFi and Web3. And then everyone's gonna love that idea even more than they love the idea of a Bitcoin ETF. That's kind of just like the very beginning of that, very small beginning of that set of ideas.
And that being said, what do you think is your advice to Dubai and the UAE to do to enable these kind of mass adoption in the region as well? How to position itself to be a leader in this space? I know that Dubai right now is one of the leaders in this space and driving this, but what do you think will happen in the next 12 and to 24 months that will be really the key driver?
I think there are generally 2 or 3 top metrics of success that are different for Web3 and capital markets. For Web3, I think the metric of success will be the amount of teams that are incorporated here and physically here, and the ecosystem that develops for Web3 applications to be built, legally incorporated and run here under a set of regulatory frameworks. And so the thing that Dubai can do there is continue to create safety and clarity for how digital assets, how Web3 crypto things work and can work and should work in a way that removes legal risks, creates clarity, creates safety, creates the ability to make regulated stable coins that can be used with minimal risk and so on, like all those types of things. That's on the Web3 side. On the capital markets side, I think it's a question of how many domestic transactions happen between banks and how much value is on bank systems that have changed into the blockchain format. And then the second metric for capital market success, and this is the real metric, is how much value flows between somewhere like Dubai and Singapore, and Dubai and Hong Kong, and Dubai and Sydney, and Dubai and some of the other more progressive jurisdictions. That, I think, is the real metric of success, but that metric of success only begins when you have transactions within a region, because everyone, in my experience, is more comfortable doing transactions in their own region with counterparties that they understand, with legal dynamics that they understand. And then once they've done enough of those transactions, what I find is they're like, we can do transactions with each other all day long. It doesn't grow the pie. It does grow the pie if there's a Dubai issued asset that someone in Hong Kong buys, and then if that person in Hong Kong can resell that asset to someone in Singapore, and they can resell it to someone in Sydney, and that asset can move across a set of cross-chain rails like CCIP, and there can be data to facilitate those transactions. That's kind of the body of work we're working through. But I think there's really these 2 paths for the success of Dubai as an ecosystem. There's the Web3 path, and there's the capital markets path. And then eventually, if you succeed in both paths, you have a robust kind of fintech, DeFi, Web3 ecosystem, and you have a high-quality capital markets ecosystem that can do blockchain transactions. And my very strong view is that eventually those 2 ecosystems merge into a single internet of contracts, and the place that creates the legal clarity for that to happen sooner will have it happen sooner. So legal clarity, I think, is a big area of leadership.
100%, and it's not only legal clarity, like you said, it's not only, we are not an island, so not only legal clarity, but also passportable, rules, where we in Hong Kong, for example, we in Singapore and other key areas can agree on the fundamentals as well to enable this kind of exchange of value and secondary and trinary markets to exist in different regions and have this seamless kind of flow of funds and with everything on-chain and off-chain working seamlessly together. So I think this is super exciting, and I think Chainlink would play a huge part of that as well. So thank you for that. I think we're running out of time, but so it was an amazing talk, and looking forward to speaking with you further in the future as well.
Thank you very much. Glad to be here. Thrilled we had a chance to chat. Thank you for having me. Thank you.
Very good.